Hello, good morning everybody, and welcome to this week's Gold and Silver Club End of Week Review, presented by myself, Phil Carr, and Nick Kalsi at the Gold and Silver Club. So today, guys, it's a bit of a post-FOMC special. We will be reviewing the latest developments in the commodities market. It's been particularly been an exceptional week, actually, and we will talk you through that very shortly. We'll be analysing the week's performance. During this live session, we will cover an end-of-week summary for gold, silver, oil, and the commodity currencies. We will look at the top trades of the week. We'll go through live market commentary and technical analysis, and also look at the week ahead. So what key events are going to affect the markets today and moving forward into next week as well. So a lot of you would have been well aware of this already. So this week, on the FOMC statement, which came through on Wednesday, we saw gold and silver prices absolutely skyrocket on the announcement of no tapering. So here you've got just two charts there of gold and silver on your screens. You can see some of the, just to put it into perspective, the huge surge that we got on gold and silver during the course of that FOMC statement. Over the course of 2 hours, we absolutely rocketed. So we hope some of you certainly caught some of these moves. Okay, so what happened to cause this? Well, gold and silver prices skyrocketed as the US Federal Reserve postponed their tapering. Precious metal prices skyrocketed during Wednesday's trading session after the US Federal Reserve announced it would leave its quantitative easing program unchanged. After 2 days of talks, the Federal Reserve decided to keep its $85 billion per month asset purchase program unchanged, indicating that policymakers are concerned that the US economy and the labour market are still too fragile to stomach a reducing in quantitative easing. So the Federal Reserve will continue buying $40 billion worth of mortgage-backed securities and $45 billion in treasuries. The Fed also announced interest rates will remain unchanged at 0% to 0.25%. On the announcement, gold prices absolutely soared to hit $1,367 an ounce at the close of US trading session. That's a 5.5% gain within 2 hours from an earlier low of $1,291 an ounce prior to the Fed statement. Silver jumped to $23.20 an ounce as of the same time from an earlier low of $21.19. So prior to the Fed statement, that's impressive gain of silver of 9.4% within 2 hours. So some huge surges on gold and silver. So it could be the start of gold's next big bull run now. Historically, September has been one of gold's best months of the year in relation to seasonality. We'll talk through that shortly. The precious metals has seen its biggest increase this month, according to the Commodity Futures Trading Commission. The wedding season in India also begins in October, followed by the festival of Diwali, India's biggest and most important holiday of the year. And in December, of course, millions of people around the world will exchange gifts at Christmas, and finally millions will celebrate Chinese New Year at the end of January 2014. So these events do increase the demand of precious metals and create lucrative opportunities, certainly for commodity traders in the coming months. So before we move into just going through some seasonality, and we'll talk you also through the moves during the Federal Reserve, just a little bit about the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also regularly contribute to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me at the Gold and Silver Club is Nick Kalsi, a professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, he discovered the formula, the mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications and appears frequently on financial television. So that's a little bit about the Gold and Silver Club, guys. So moving on, we're just going to take a look this morning and have a look at where the gold price is right now. So gold price actually is looking very interesting at the moment. So we are currently sitting at $1,356 per ounce on gold right now. So we'll take a look at that shortly. We're coming down to some interesting levels at the moment on gold. Okay, so one thing I want to certainly talk you through is the US dollar index and its relationship with gold and the commodity currencies. So as I'm sure a lot of you know, the US dollar index tends to move in the opposite direction to gold and silver. And on the no taper announcement, which came through on Wednesday, we saw very quickly the US dollar index break a very important 2-year trend line. I'll show you on Reuters very shortly, but this was key for really the gold and silver surge upwards. We also see that follow through with Australian US dollar, New Zealand US dollar, and we had the USD CAD absolutely fell as well and tanked alongside the US dollar index, as you would expect with the correlation there. So this was very important to see US dollar index breaking that key support, US dollar index really getting hit from the FOMC statement, and then we really had the green flag to be able to position ourselves to go long on gold, silver, and the commodity currencies. Okay, so here is the commodity currency correlations that I want to talk you through. So this is just immediately on the announcement, just within a couple of minutes there, we can see New Zealand US dollar, Australian US dollar immediately breaking out from key levels there, rocketing on that news. And we can see the bottom right-hand corner, the USD Canadian dollar about to break a major support level. So there was a bit of a delay with USD CAD. We saw Australian US dollar, New Zealand US dollar rocket first. So if you didn't get an opportunity to get in those, there was still time in order to enter additional positions. And USD CAD offered that perfect opportunity actually once the US dollar index had broken in order to short as well from a major level. But this is the correlation that you will often get if with the US dollar index. If the US dollar index goes up, you'll see Australian US dollar, New Zealand US dollar go down, and USD CAD going up, and vice versa. So very tradable correlations that we've got with commodity currencies. Now, in terms of seasonality, we were really expecting that we could have some sort of a surge in the gold and silver prices. That it wasn't entirely unexpected that we got this the news breakout of no taper. If you go back to seasonality and you look at the month of September, what typically happens is we do typically tend to reach a bottom for the month around mid-September, although it's been quite an extreme low this month in that we got just below around about the 12.90 mark just prior to the Federal Reserve announcement. But nevertheless, on the announcement, we saw this surge, and that ties in very well with seasonality. You can see we're right at the top of that surge at the moment. Probably from here, what we're going to see is some degree of consolidation. We might get a little bit of a pullback, but pullbacks might be seen as further buying opportunities. So this is what we do expect to see in terms of the seasonality. September does tend to be one of the most bullish months of the year in terms of gold and silver price moves. But we can then expect potentially beginning of October to see more gains on gold and silver, and then we do tend to see towards the middle of October, this is where you tend to see pullbacks in gold and silver until we get more buying, which comes in towards the end of November, mid-November and December. But we'll be talking through that more as we approach October. But right now, what you need to know in September is, yes, seasonality has played out as well, and that we are expecting some consolidation here where we are before the next leg higher. Okay, so let's move across to our top trades of the week using the Gold and Silver Club signature trading strategies. Well, of course, you probably guessed it. We caught the breakout with gold. Now, it doesn't always, you don't necessarily have to have caught it, obviously, right at the lows there with gold around the 1300s. It would have been very difficult to do that because gold did gap from about it gapped all the way, I think, to 1330 from about 1313 levels. So unless you had pending orders set beforehand or you bought beforehand, which is always risky prior to an FOMC, you wouldn't have got a chance to get in until the price got up past 1330. We were getting in at a very key breakout of key level 1337, which put us above some key price action levels and some key moving averages. And from that level, we've then been able to take advantage of the break. First of all, with 1353, which was our first profit target. And then we've come all the way up and hit the next key profit target, which was 1372, just taking profit just below that at 1371. So that was a nice gain of 340 pips, points there on the breakout with gold. So the risk on that was 80 pips. So each lot traded $800 risk for 340 pips profit. So $3,400 profit for each lot traded for a nice 4-to-1 risk on that big gold surge. We also caught a really nice silver breakout as well, very predictable breakout on silver. This was just a breakout from 22.45 just up to 23.20, the next key level above. We did see silver surge from much lower prices, but we again wanted confirmation, and we got in for a really nice 75 pip move. So risk on that 27 pips. So each lot traded $270 risk for 75 pips, so $750 profit for a 3-to-1 on the silver breakout. We also caught the breakout from a key level on Australian US dollar as that surged past a key level of resistance that we've been eyeing up for most of the week. So that was at 0.9390, just on pending orders here, and exiting at the next key Fibonacci level above, which was 0.9506 for a 116 pip gain. So that was a 31 pip risk on the trade, so $310 for each lot traded for 116 pips, so 1,160 US dollars profit on each trade for a 3-to-1 on the Australian US dollar breakout. And USD CAD, this is we managed to catch the breakdown of price of USD CAD as well. It came down, tested actually a 200-day moving average, came down, broke past that, and simply got out at 1.0185. So the risk on that was 22 pips. So very tight risk on that, and that was very predictable once the US dollar index broken. Came down for a 63 pip profit there, so for $630 on each lot traded for a 3-to-1 risk to reward on USD CAD. So these are all FOMC announcement trades. And then just yesterday, we also had a nice breakout on the natural gas inventories yesterday at 3:30 p.m. BST, and we saw the inventories came in less than expected, and that caused a big surge. So natural gas very similar to, which we'll talk through shortly, similar to the oil inventories which come out every Wednesday. Natural gas very tradable as well. So on that breakout, entering at 3.831, coming out at 3.880 for a 49 pip profit. So 25 pips risk for $250 for each lot traded for 49 pips. So $490 profit for a 2-to-1 on natural gas yesterday just on inventories. Okay, so what we'll do next, guys, so those are all the major, the biggest moves that we've had this week, particularly from the FOMC. We'll move across and we're going to take a look at Reuters. So we're just going to talk you through what we're seeing at the moment, and we'll go across to my live charts. Okay, so it's just the Gold and Silver Club. It's the custom-built Reuters news trading platform here. So, let me just talk you through it. So as you can see, the bottom right-hand corner, what we want to take note of at the moment is we've got, this is the US dollar index, and this is, if I just put it onto the 2-year for you, you can see here, actually put it on the 5-year to make it a little bit more clear. You can see this trend line where we broke through on the FOMC statement. So not really too much support at the level where it's come down to at the moment, around the 80 mark, although we are seeing a bit of a retracement there at the moment. But if we just zoom in and we have a look at how that's looking just today, we can see there that we are seeing, did get a little bit of a retracement yesterday, and we can see at the moment just got a little bit of indecision in the market. We've got some news coming out today which I'll talk you through very shortly, which could have further impact on the US dollar. But overall here for the day, in fact, we're going to move across and I'll just talk you through the charts and we'll have a look at some key levels. Okay, good. So first market I want to talk through is gold. So you can see here on gold where we had this huge surge up on gold. This was on Wednesday's FOMC statement. and we've broken through key levels at 1336, come up, broken through 1353, and come all the way up here and come up to our profit target here, to between 1370 and 1373, where the price has actually found resistance at the moment. So we did have a doji yesterday causing some indecision. So the market has actually come down. It's just retraced today down to 1350 before finding a little bit of support. We are currently at a level of support at 1356. So what you want to be watching for at the moment is whether pullbacks in gold are going to be treated as buying opportunities in order for traders to position themselves for larger moves to the upside. So around the 1350 level where we are at the moment, you want to see whether the 1350 level will get held. If we break through 1350, there's not too much support really. If we get below 1349, 1348, you're not going to see much support until we get to 1336. I would imagine that stops for the longs will get triggered, stop losses, and those who have rallied it all the way up from these lower prices will probably have their stops moved higher in order to lock in profits. So we start to break below 1350, we'll probably see gold fall back to around the 1333 to 1336 level. Now above this is going to be quite interesting as well. So if gold does break above 1370, more or less a 1374 level, we could see a breakout to really 1384 initially, and then there's not really too much to stop the price getting to around the 1415 level, and then beyond that, we'll talk about that next week. But that's what we're looking at for the short term at the moment on gold. So we can see we're getting a little bit of consolidation at the moment. Similar situation to silver currently. Let's just move across to silver. So silver actually is just did pull back a little bit today. We had a really nice sort of inverse hammer on the daily time frame yesterday. Again, came up to a key level of resistance here at around 2320, key Fibonacci level, where a lot of traders took profit on the big surge up that we got on FOMC. It did have a very large surge on FOMC. It's fallen back slightly more than gold has today, or you can see on the daily time frame we have got a bit of a hammer starting to form there. So you can see there is some buying going in at the moment at these levels on the pullback. Next key levels I'll be looking at for silver at the moment is really going to be a break above the high from the FOMC. It's going to probably see more traders get interested now. So if we get above 2340 on silver, we have retraced now just shy of a key level of support. So we traced around 2250 today. If we do get breaks beyond about 2233 here, I would then be interested in potential shorty opportunities if we do get breaks through these key levels, just because a lot of stop losses will get triggered. But at the moment, it's tending to consolidate. We are seeing some profit taking from the surge of FOMC, but I'll be looking at these key levels either side. I won't be doing too much with silver where it is right now at its current level. I'd wait for further confirmation and better setups. Moving across to Australian US dollar. So Australian US dollar put in a really big surge on the FOMC statement as well. You can see it came up to our profit target. We're actually seeing a retracement now. We are actually breaking through yesterday's low where we are today. So we could just see a retest and a pullback to 0.9390. This blue level here, which would represent a high from the breakout that we got on Sunday, the Sunday open this week, where the markets all gapped upwards. So we could see the price come to there or just come down to retest the Fibonacci level just below that if we continue down today. So 0.93783 on Australian US dollar. So if we're breaking through yesterday's low, probably see it just come back down, retest, kiss that level of support, and potentially we're going to see more buys get into the market. If we do break below 0.93783, we have some momentum behind it. I'll be then looking at this low levels around 0.92785. For me, Australian US dollar is one to be watching this morning. New Zealand US dollar, not as weak as Australian US dollar, put in a better move than Australian US dollar. Actually had a huge surge. You can see where it's just come shy of a key Fibonacci level again at 0.84389. It's candle of indecision yesterday, doji on the daily time frame. Where we're at right now, we're getting supported again by a Fibonacci level just here at 0.83644. So I wouldn't really be interested in doing too much with New Zealand US dollar unless we break the high or low of yesterday's doji here. So for me right now, not too much to do on New Zealand US dollar. Just see where the next key levels it's going to break through are. I'll be more interested in Australian US dollar today, but it's certainly put in an impressive run here over the last month in September. It's surged hugely. Okay, moving on to USD Canadian dollar. So USD Canadian dollar, you can see here where we broke its key level of support during the FOMC statement. We broke further down. We came down, tested a 200-day moving average there. We've spiked lower to a little bit of an area of consolidation and support. We then got a strong hammer forming just yesterday, which has followed through, and we're now coming up to previous support, which might provide some resistance here. We want to see whether you've got some key moving averages just above, which are providing a little bit of resistance today, and we've got a bit of a resistance channel here, which USD CAD needs to break through in order to go higher. So we've certainly had a big retracement since it broke through key levels there. At the moment, we would be interested to see, are we going to break out higher and come up to 1.03385 at the moment? Now, this will probably be determined by the US dollar index as well, whether we can see the US dollar index rally. So we've got I'll talk you through it very shortly. We do have the Federal Reserve, one of the members, the FOMC members, speaking this afternoon, which could have some further impact. So I'll talk you through that shortly. But if we do see resistance here, we could pull back again. This could be treated as resistance now. We might see a fall back down to the low that we hit during the FOMC statement. So we'll be looking out for that, very much dependent on how the US dollar index is going to act today and going through to early next week. Moving across to oil, so we've seen some nice moves on oil as well. Oil actually move across to to Brent first. Brent actually came down to test the 1.052 level on the FOMC statement just beforehand. That level held. We had a really nice rally all the way up to 111.31. We're just following really these key Fibonacci levels very well. It's come down, found support at 108.43 just yesterday for those shorting from 111.31, and we've had some opportunities just to go short and go long just within this consolidation zone that we've got at the moment on oil. So we can see it's just found support here at 108.43. It's actually come right up just to 109.35 where it is at the moment. So Brent at the moment, if we do get a break above 109.35, probably we're going to just have a clear run to 110. 110 about 65 level. If we break through 108.43, we're probably just going to come back to 107.52. So Brent for me is following his key levels very well, more so than WTI, but WTI has also found some key support and resistance at key levels as well. Got a bit of a doji forming on the daily, so further weakness could see us retest 104.21. If we do see the market rally a little bit today, we could come up to 107.26. But there's definitely more clear trading opportunities on Brent at the moment versus WTI. Okay, and let me just put that back onto Reuters. Okay, fantastic. So this is the US dollar index. You can see a little bit of indecision there at the moment. So we're definitely waiting for further, for the US market to open really this afternoon. The next hour and a half, 2 hours, we'll then start to see more direction on the US dollar index today. Okay, good. So let's move across, guys, and we're going to take a look and see what news we have over the course of today and moving into next week as well. Okay, so key events looking forward for the week ahead. So today we've got 1:30 p.m. So those of you trading CAD, this will affect your CAD trade. We have at 1:30 p.m. GMT, 8:30 a.m. ET, we've got the CAD CPI. That index measures the change in the price of goods and services, excluding food and energy, from the perspective of the consumer. It's a key way to measure changes in purchasing trends and inflation. So a higher than expected reading should be taken as bullish for the CAD. A lower than expected reading should be taken as bearish for the CAD. Then moving to later on today, we do have FOMC member James Bullard speaks. Federal Reserve Bank of St. Louis, President of Federal Open Market Committee, FOMC, voting member James Bullard is to speak. The FOMC members are responsible for setting the benchmark interest rate, and their speeches are very closely watched for indicators on the future possible direction of monetary policy. So his comments may affect the US dollar, gold and silver prices just later on today. Of course, be careful as well of if you are in positions at the moment going into the weekend bear in mind, last week we saw tremendous gaps on the market. We've seen this throughout August as well. So I would just caution this might just be a reminder for some of you, but just caution of being careful of how many positions you keep open over weekends at the moment, because we are seeing big gaps on the market on the Sunday open. So just bear that in mind, that you want to be avoiding getting into too many positions right before the Friday close. Next Wednesday, we've got Wednesday at 1:30 p.m. GMT, the Wednesday 24th September, we've got the US core durable goods orders. Core durable goods orders measure the change in the total value of new orders for long-lasting manufactured goods, excluding transportation items. So a higher reading indicates increased manufacturing activity. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected should be taken as bearish for the US dollar. Then we have on Wednesday at 3 p.m. next week, we've got the US new home sales. That report measures the annualized number of new single family homes that were sold during the previous month. So that report tends to have more impact when it's released ahead of existing home sales, because the reports are very tightly correlated. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. And then, of course, next Wednesday, we do have crude oil inventories. So this data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bullish for crude oil. A lower than expected reading should be taken, as bearish for crude oil. A lower than expected reading should be taken as bullish. So essentially, if there's more crude oil in inventories, we do tend to see the price of crude oil go down. If there is a deficit of oil in inventories, we tend to see crude oil go up. But you want to just combine fundamentals with technicals as well. Next Thursday, we have US GDP. That report measures the annualized change in the inflation-adjusted value of goods and services produced by the economy. That's the broadest measure of economic activity and the primary indicator of the economy's health. Higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And just moving towards the end of the week, we also, as you saw, we caught the breakout this week. We've got US natural gas storage inventories next Thursday, 3:30 p.m. GMT, 10:30 a.m. ET. The Energy Information Administration, EIA, natural gas storage report measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So while this is a US indicator, it tends to have a greater impact on the CAD due to Canada's sizable energy sector. That's important because the CAD is correlated to gold and oil prices. We saw yesterday when natural gas spiked on this news that CAD also spiked as well. So there's a lot of correlation between those two. On Friday, we've got US personal spending next week, so which is at 1:30 p.m. GMT, 8:30 a.m. ET. This index measures the change in the inflation-adjusted value of all spending by consumers. Consumer spending account for the majority of overall economic activity. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And then next Friday, we also have the US Michigan Consumer Sentiment. So the University of Michigan Consumer Sentiment Index rates the relative level of current and future economic conditions. There are two versions of this data released 2 weeks apart. So we've got the preliminary and revised. The preliminary data tends to have a greater impact, and a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. And that's next Friday at 2:55 p.m. GMT, 9:55 ET. Okay, so that's all the major news we've got coming out today and moving into next week as well. For those of you who really want to take it to the next level, you can also find out more about our live trading room program. So to find out more about the Gold and Silver Club live trading room, you can very simply request more information here. Just go to www.jointhegollandsilverclub.com to be a part of our exclusive Gold and Silver Club community and have access to all our live trading rooms, forums, and alerts. So you can contact us also at our London office, 0207 193 0403, or our New York office, +1 646 808 0403, or our Johannesburg office, which is +27 11 083 8403, or simply email us at office@thegoldandsilverclub.com. So very simply to do that, just go to join the goldandsilverclub.com, and that is the form just to complete. Okay, and also, of course, make sure you take advantage of our newsletter. Subscribe to our newsletter at thegoldandsilverclub.com to receive free weekly gold, silver, oil, commodity currency news, live market analysis, and prices. Okay, fantastic. So with that, guys, we wish you good luck for the rest of the week's the rest of the week's trading. We'll definitely catch you back here same time next week. So with that, guys, take care, have a great weekend, and we'll see you on the next one. Okay, all right, cheers everybody, thanks, bye bye.